Hello, everyone. It's a great honor to be here with you. Today, we are going to analyze Babcock International Group's performance in the latest fiscal year. Babcock International Group is a multinational corporation headquartered in UK, which specializes in support services, manages complex assets and infrastructure in the safety and mission critical environments. We'll be covering the key three areas, including strategic and operating policies, appraisal of financial performance, and market analysis. The strategic objective of Babcock is to grow from current position in both the UK and the overseas markets, delivering sustainable value for the shareholders. The firm has consistently delivered organic growth at constant exchange rates, achieving an average of 9% organic revenue growth and 13% organic operating profit growth, and contributed by all its business units. Babcock continues to focus on delivering value for money, solutions, and designing contract structures which allows the firm and its partners to share the risk and rewards of contract outputs. The aim is to create value for the shareholders and other stakeholders. Babcock International operates in four major divisions. So, talking about the Marine and Technology Division, the outlook for the Marine and Technology Division remains positive as the firm has been tracking significant future opportunities to support the long term growth both in the UK and international markets. The Marine and Technology Division reported a total 13% increase in the revenue. Coming to the Defense and Security Division, win, develop, and expand are the three strategic actions of this division. The division has also established an international business unit to support development and growth outside the UK. Despite a reduction in revenue due to completion of the East and Southwest regional prime contracts, the operating profit increased by 9%. Talking about the support services, Babcock has successfully mobilized the plain line track framework in new geographies across UK, undertaking a large-scale program of change to integrate staff and the Babcock operating methodology. The operating profit, including the joint ventures, increased by 19% to £100.9 million. Coming to the international division, the division is developing a number of opportunities in the new geographies such as Africa and South America. MCS has continued to make good progress as a part of Babcock with all contracts meeting or exceeding customers' requirement. The international division reported total revenue of £811.4 million and an operating margin of 14.4%. Now I'll be taking you through the significant accounting policies. The continued hedging of inflation and interest rate changes has helped to mitigate volatility of value assets and liabilities. The group is exposed to movements in foreign currency exchange rates in respect of foreign currency denomination transactions. The company has taken advantage of the exemption granted by Section 408 of the Companies Act 2006, whereby no individual profit and loss account of the company is disclosed. The company has guaranteed or has joint and several liabilities for bank facilities of £1,359.5 million provided to certain group companies. Now, Ophelia will talk about the financial performance of Babcock.
Thanks for your share. Let's move on to appraisals of Babcock's financial performance. In this part, we focus on horizontal analysis of three major financial statements and ratio analysis. We bring in BAE System as a competitor to help evaluate Babcock's performance. BAE is a company whose objectives are the delivering military capability and protecting national security. As we can see from the income statement, the performance of Babcock's operation for 2015 is strong and stable. It reflects in the financial results for the previous year and the delivery of further growth in revenue and operating profit. This year's revenue growth has come both organically through major contract wins and by expanding existing contracts and from acquisitions made during the last year. Total revenue for the year was increased by 27%. The main increase was from mission critical services. The Babcock business, excluding acquisitions, delivered revenue growth at constant exchange rates of 12%. The main contributor to this growth was the support service division, which reported a 23% growth in revenue, benefiting from the increased activity in its subsidiary Cavendish Nuclear. The marine and technology segment achieved organic revenue growth of 14% at constant exchange rates. Organic growth was driven by increased volumes in warship refit activities and growing commercial and technology activities. Now let's have a look on how BAE performed. The revenue of BAE reduced by £1.5 billion in 2015. Even though BAE has a large economic scale, Babcock performed better than BAE regardless of revenue. Total operating profit increased by 37%. The main increase was from MCS. The Babcock business achieved organic growth in operating profit of 11% at constant exchange rates. For the Marine and Technology division, operating profit increased in line with the revenue at 13%. For the Support Service division, operating profit growth was 19%. As for BAE System, operating profit increased by 61%, a almost result from sharply decreased impairment of intangible assets. If we recalculate the operating profits, the figure will be decreased by 13%. Hence, Babcock also expressed better operating profit growth than BAE did. Now let's have a look at the performance of its financial position statement. During the year, Babcock has invested further 200 million in acquisitions. They acquired 4 companies in last year. The acquisitions increased Babcock's goodwill and contribute partly to the increase of PPE. This also brought the increase on Babcock's debt. Bank and other borrowings were increased by 134%. On 7th May 2014, a rights issue was completed. This increased Babcock's equity. As for the performance of Babcock's cash flow statement, we can see that there was a net increase in cash and cash equivalents compared to the decrease in 2014. This was because the strength of the order book and the bid line. Babcock had a tremendous performance in the past 5 years. Here we highlight some key financial figures. The increase on revenue was 27%. The increase on operating profit was 37%. As you can see, financial performance of Babcock is uptrending. The board is quite confident with their future. Now, Yang will continue ratio analysis part.
Thank you, Ophelia. As we mentioned before, Babcock's operating profit has increased considerably, so its net profit margin has risen by 26% in line with the growing profitability. However, Babcock's return on capital employed has dropped by 27%, which results from 3 main aspects. Firstly, the acquired mission-critical services long-term debt was consolidated into group's long-term liabilities. Secondly, in order to complete acquisitions and maintain group's fund arrangements, Babcock refinanced their long-term debts. And thirdly, they issued around 139 million new ordinary shares both for acquisitions and other operating activities. Moreover, as a result of such huge increase in both equity and long-term liabilities, Babcock's asset turnover has decreased by 41%. Since some of Babcock's contracts have been just carried out, the inventory turnover has increased by 30%, but the overall efficiency of working capital has been kept steady. Due to both higher equity and debt in financing structure, Babcock's gearing does not change too much, while the interest cover has a 22% fall, due to higher debt requiring a higher finance cost of £101 million. However, this finance cost was still lower than BAE, which has a gearing ratio of 4 and indicates more risk of the company. In terms of investor ratios, both earning per share and dividend per share have grown substantially, where the percentage increases have been adjusted according to the new ordinary shares issue. The dividend per share has also achieved its target of delivering cash conversion over 100%. Compared with BAE, the reason that they have a higher return on equity is that BAE has a £4,000 million deficit of retained earnings, which decreased their equity sharply, With such strong financial results, the Babcock's board continues to have confidence in the long-term future of their business. That's all for Babcock's internal operations. Now let's welcome Lawrence to explain the external market analysis.
Thanks, my colleague. Next is market analysis. First, let's take a look at current market condition. The market size is about £14 billion annually. According to the data of London Stock Exchange, the industry has grown rapidly in this year, with UK government now in the fifth year of a 10-year fiscal consolidation period. We expect that the demand for public sector outsourcing will continue into the foreseeable future. The division is responding to this demand by developing a new solution to maximize service quality and volumes while minimizing cost of service delivery to customers. Moving on to its share price. As you can see, Babcock's price has been slowly dropped since April in 2014. This is because Babcock has acquired a lot of new companies since 2014. A large acquisition is not always good, especially it takes time and efforts to coordinate the acquired company. Also, Babcock acquired Avinci, an airplane company which has a large accident last year. So investors held negative opinions against this decision. Not to mention Avinci is an England company, but Babcock's headquarters located in Scotland. So whether the two companies is still in the same country is a problem. So the investor have a great doubt in Babcock's future value. Now we move on to the comparison with the whole industry. As you can see from the graph, Babcock is performing poorly, comparing to the FTSE 315 and the supporting service industry, as shown as the blue and orange line. They both show a steady move compared to Babcock, thus the downtrend of Babcock is not affected by the macro environment. Finally, since the price has reached a relatively low point, it's a great opportunity to buy the share. Those who invested in Babcock in 2003 has seen earnings per share grew from 5 pence to 62 pence in the 2012 and 2013 financial years. Also, according to the several financial analysis, the 18 continuous forecast investment analysis covering Babcock advised that the company will outperform the market. That's all for the market analysis. Next is the narrative analysis.
Thank you, Lawrence. To creating long-term value for shareholders through a strong, successful, and sustainable business, Babcock sets up 4 non-financial KPIs: environmental quality, number of graduates, number of apprentices, and senior management retention. Babcock applied IBP rather than ISO 14001 to make a more sensible measure for the environment quality. But departments like support services is still not working very well due to customer constraints and inevitable demand of power resources. As their business expands, they are struggling with compliance of the relevant regulation over time. The other way for Babcock maintains their sustainability of growth is to develop their own people by launching their own training schemes. The annual report reflects that more graduates and apprentices are recruited year by year, but that also requires more training activities and resources. However, the total number of graduates and apprentices of 1,152 is only account for about 3% of the total employees. It looks like Babcock is willing to put more of their training resources on the few key senior management posts rather than the whole management level so far. The 96% of senior managers still constantly working for the group in the last year shows us how fixed the upper level of the management of this organization is. And this has also been demonstrated in the directors' biographies. Half of the 6 non-executive directors has been working on this position for over 3 years. That is, already finished in the initial term. The senior independent director has even served on board over 6 years. Their independence and impartiality may have been weakening in such a long time. As a result of the group's strong financial performance, it looks really was a goal for Babcock's share as an investment choice, as the market underestimated the company's value. However, as its business relies largely on its extremely powerful customers, the financial performance will be significantly affected by the economic situation and national policies We also need to be careful with the risk of potential problems within their internal control system. Okay, that's all. Thank you for your time.